If you strip back the political spin, it's clear Australia faces a weak economy ahead based on a rising structural deficit and falling productivity. The Titanic and icebergs springs to mind as an unsinkable ship sank. Strong migration, government support for households, and a growing public sector will not be enough to turn this ship around. We really need some more structural reforms, including tax reform. But that seems, well, frankly, unlikely. Instead, we get extra doses of spin and half truths while still heading for the disaster ahead. As I've been highlighting, the real issue that Australia is facing is centered on fading productivity, which leads to higher inflation and lower real wages at a time when government spending across all levels of government is higher than it was in the 1980s. That's outside of the pandemic. To bring this into sharp relief, the IMF just released their staff concluding statement of the 2025 Article 4 mission to Australia, which you could think of as an annual health check for the Australian economy. Now, of course, the IMF is founded on neoliberal sensitivities, so we shouldn't be surprised to see that they suggested the government expand the 10% goods and services tax and reintroduce a mining tax, which, of course, contributed to the downfall of Labour Prime Minister Kevin Rudd 15 years ago, thanks to the power of big business to set the agenda. The IMF report suggests that the extra money raised could help fund tax cuts for workers and companies, which could boost the incentive to work and increase business investment. Comprehensive tax reform and greater spending efficiency can maintain fiscal sustainability, enhance economic resilience, and boost productivity, the IMF said. Expenditure reforms should continue to target efficiency savings in growing cost areas such as the NDS and aged care and protect productive infrastructure investment, the IMF said. The truth, though, is that the more radical approach which is needed to turn the ship is unlikely to be politically palatable in the current environment. Anthony Albanese has already swept off the table calls by economists to broaden the GST. Ultimately, efforts to make room for tax cuts will prove to be a self-defeating exercise unless the government embraces fiscal discipline. The imperative for restraint must equally apply to state and territory governments too, whose balance sheets are sinking into the red. Yes, Victoria, I'm thinking of you.